What's up, everyone? Today, I'm going to be talking about what a stock is, how it functions, and why it should matter to you. So hang tight. By now, you know the deal. This video is not financial advice, nor should it be construed as such. This video is strictly for educational purposes. So what is a stock? Simply put, a stock represents ownership or equity in a company or corporation in the form of a share. A share is a unit that represents proportional interest in a business. Each of these shares have a price, and that price is determined by the perceived value of investors along with the performance of the company itself. The more shares you have, the more vested interest you're going to have in the company and want to see it do well. Why would companies issue stocks? Companies oftentimes will issue stocks when it's looking to raise capital. They do so in something called an initial public offering, IPO for short. After the IPO, it will then be traded on a variety of markets by individual and institutional investors, such as the New York Stock Exchange, the NASDAQ, OTC markets, London Stock Exchange, and the list goes on and on. As I mentioned in a previous video, you can buy stocks within your accounts at brokerages like Vanguard, Fidelity, TD Ameritrade, Charles Schwab, etc., etc. Now, why do investors invest in stocks? Stocks are a great way to partake in the growth of a company that one may feel strongly about. If the company does well, you will see this reflected by an increased share price over time. However, if the company does not do well, you should see this also reflected in the share price. The goal over time is to sell these shares for more than you bought them. The difference is going to be your capital gains, or think of it as profit. For example, let's say I buy 1,000 shares of stock ABC for $10 a share. 20 years later, I sell those 1,000 shares for $150 a share. I now have long-term capital gains of $140,000 or a profit of $140,000. Another reason people want to invest in stocks is for dividends. Dividends are payments made to shareholders out of the company's revenues, typically on a quarterly basis, but it varies from company to company. Dividends provide cash flow to investors or an opportunity for them to reinvest these dividends and purchase more shares off of their original investment. Dividends can be offered in the form of more stock, which is called a stock dividend, or they can be offered in cash, which is called a cash dividend. So why should stocks matter to you? Among the many reasons, they provide potential for high returns and the opportunity to outpace inflation, which is very important. If done correctly, stocks in your portfolio can provide an aggressive approach to wealth building. In the past 30 years, the S&P 500 has returned on average annually 10%. After inflation is taken into account, it has returned 8%. This matters because you don't want your dollar to lag behind inflation and lose its purchasing power. Stocks provide this opportunity, among other investments. The more time you have to invest, the more risk you're able to take on by investing in riskier assets, such as stocks. That way, if something goes south, you have some time to recoup some of those losses. There are many stocks of varying market caps across many different industries. So it is important that you research not only the company, but the industry, because you want to make sure that it's going to be around for a while. Now, while stocks come with their upside potential, they also come with a few risks. Some of the risks include legislation risk, which is the risk that laws may work unfavorably to the business or their industry. And there's also the risk that the business just may go out of business or may not be around for the near future or even longer future. Historically speaking, very few companies have made it to 100 years. Subscribe to the channel because later on I'm going to be talking about how you can mitigate this risk and lower the chances of your portfolio being affected by these types of risks. When deciding what stocks to invest in, here are some tips. 1, look for companies that have been around a while. With these companies, pick the ones that have a strong track record. Make sure you feel comfortable with the industry and the company itself so that you know what you're actually invested in. And lastly, and probably most importantly, make sure you know how this stock or couple of stocks fits into your overall portfolio. With that being said, thanks for watching. Share with someone who can benefit from understanding a little bit more about stocks, and make sure you subscribe. Like always, let's get lit.